Today, Jamie Dimon says he's done talking about crypto. The SEC and Coinbase face off in federal court. And the managing director at CoinDesk Indices breaks down what's behind crypto's price moves in the days after spot Bitcoin ETFs launched in the US. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Major cryptocurrencies are giving back yesterday's gains, with Bitcoin dropping more than 2% by noon Eastern. It fell back to the $42,000 level. Ether also in the red. It fell more than 1.5%. And Chainlink, meanwhile, a bright spot for crypto this morning. It rose more than 3.5% to 1576. Okay, let's talk about the top stories. Bitcoin miner Core Scientific is marching ahead with its plan to exit bankruptcy. The company announced on Tuesday that a U.S. court had confirmed its restructuring plan, which would help it exit bankruptcy and relist shares on the NASDAQ by the end of January. Core said the plan means existing shareholders would get shares in the new common stock. It would also see the company's existing debt paid down entirely. Core Scientific will be exiting bankruptcy just weeks ahead of the halving, which is set to ramp up the pressure on mining companies as mining rewards get cut in half. Next, the SEC and Coinbase are set to face off in federal court over whether the agency's lawsuit against the company can move forward. The Southern District of New York set aside 4 hours, divided equally, for the two sides to make their case on whether Coinbase's business model is breaking U.S. securities laws. Coinbase is hoping to get the case dismissed based on its belief that the SEC is overreaching. The agency, on the other hand, still believes Coinbase allowed the trading of more than a dozen crypto tokens that should have been registered as securities, and that Coinbase's staking program should have registered with the agency. And finally, CNBC is on the ground at the World Economic Forum in Davos and caught up with JPMorgan CEO Jamie Dimon. He's long been a critic of most crypto, and now he says he's tired of talking about it, but still sees the potential of blockchain.
This is the last time I've ever talked about this in CNBC, okay? So help me God. Blockchain is real, it's a technology. We use it, it's gonna move money, it's gonna move data, it's efficient. We've been talking about that for 12 years too, and it's very small, okay? So I think we've wasted too many words in that. Cryptocurrencies, there are two types. There's a cryptocurrency which might actually do something. Think of a cryptocurrency as an embedded smart contract in it, and that we can use it to buy and sell real estate and move data. That may have value. And then there's one which does nothing. I call it the pet rock, the Bitcoin or something like that. And so on the Bitcoin, there's, first of all, and I'm not trying to make a joke here. There are use cases, AML, fraud, anti-money laundering, tax avoidance, sex trafficking. Those are real use cases, and you see it being used for hundreds, maybe 50, $100 billion a year for that. That is the end use case. Everything else is people train among themselves.
Dimon also made it clear if you want to invest in Bitcoin, he's not going to stop you.
Now, my last statement, the last time I ever talk about Bitcoin, is I defend your right to do Bitcoin. I think, it's okay. I don't want to tell you what to do. So my personal advice would be don't get involved, but I don't want to tell any one of you what to do. It's a free country.
All right, for our main story, crypto got a new benchmark today that's meant to show how the market is doing broadly. It's called the CoinDesk 20 Index. Think of it like the S&P 500 for cryptocurrencies. Crypto World's Talia Kaplan spoke with Andy Baehr, managing director at CoinDesk Indices, about the new benchmark as well as what's driving crypto prices in the week after spot Bitcoin ETFs began trading in the U.S.
This morning, CoinDesk introduced an index which measures the performance of the top digital assets, including Bitcoin and Ether. I'll ask you all about that new benchmark in just a bit, but I want to start off by focusing on what has been happening to crypto prices since those spot Bitcoin ETFs went live last week. Following the SEC's landmark approval of spot Bitcoin ETFs, the price of Bitcoin initially jumped above $49,000, but then gave back gains, and this morning was trading at the $42,000 level. So what do you think is happening there?
Well, last week we all gathered around our screens to watch what we call the season finale of the crypto winter. And that absolutely did not disappoint. There was intrigue with the purported hack of the SECx.com account. There was drama with battling statements between SEC Chair Gensler and Commissioner Pierce. And there was an exciting but orderly first day of trading as the crypto world and the ETF world kind of did their big production number. In the end, it was a really successful launch with a lot of blockbuster statistics. There were some dire predictions of a real sell the news depression in the price of Bitcoin. Bitcoin had been trading in the low 40s before we got very close to ETF launch day, and it feels like it has regained some support above that 42,000 level. So I think we have to just zoom out a little bit and look at the bigger price trend and see that the price of Bitcoin is pretty stable. That being said, our Bitcoin trend indicator is signaling a weakening of Bitcoin's uptrend since that started back in October.
Interesting. Now, I checked the numbers this morning, and all the spot Bitcoin ETFs are in the red since launching last Thursday, anywhere between around 7 and 17%. Obviously, Bitcoin is down since those products launched, as you astutely noted, but most of the spot ETFs are down more than the price of the cryptocurrency. So, what do you think is happening there?
I think it really depends on when people actually got into the ETFs and at what prices. I think that what we have noticed is that the prices of the ETFs and the prices of their NAVs, or the reference price of Bitcoin, have been tracking pretty accurately. So we think that investors should feel as if the ETFs properly reflect their exposure to Bitcoin. Again, hopefully most people are looking at Bitcoin as a longer term holding and a 2 to 3 or 4 or 5% allocation in their long-term portfolios, in which case they should be thinking about the future of finance and kind of letting these first couple of days get by us.
Another interesting market note, Ether has outperformed Bitcoin recently, climbing 16% last week. The cryptocurrency is now trading around the $2,500 level. So why do you think Ether has been outperforming Bitcoin? Is it because investors now see a path forward for spot Ether ETFs?
I think that's a great point. And after trailing Bitcoin's really powerful performance in 2023, Ether has sort of put its uniform back on and gotten back in the game. There is a lot of speculation around when the US will allow Ether ETFs. Investors who start to think about Ether and the Ethereum network will soon realize that there's a staking yield inherent in the price of Ether, which we at CoinDesk Indices measure with a measure called Caesar. And how that yield is actually going to find its way into investor pockets and investor accounts is something which is yet to be worked out. So I think there's a lot of mechanics to get through in the United States. Other countries are going through the same thoughts. Eventually, I think we'll get there, and that will help, bring a really quite different digital asset to join Bitcoin as the first two kind of mega tokens to be available in ETF form.
Turning back to the new index, along with the launch, the bullish digital asset exchange listed a new perpetual futures contract of the CoinDesk 20 index. Mm-hmm. What was the impetus behind these ideas, and how does it all work exactly?
So we're really excited today because we're launching the CoinDesk 20 index. This is going to be the new reference of the digital asset class for everyone, for trading, for investing, and for referencing. Now that Bitcoin ETFs and soon Ether ETFs will be available, it's a great time for investors and advisors and institutions to spend more time thinking about digital assets. They'll soon realize that there's a wide variety of tokens out there with very different characteristics to Bitcoin and to Ether, and that there's diversification opportunities available. The CoinDesk 20 index is built to reference that new digital asset class in the same way equity or commodity indices are designed to reference those asset classes, but it's also built to trade. And as you noted on the bullish exchange, perpetual futures contracts, which is a really institutional crypto native tool for trading assets very quickly and very efficiently, launched yesterday. And we've already had more than $10 million of CoinDesk 20 trade as an index perp future.
So focusing on those spot Bitcoin ETFs, what was your initial reaction to that landmark decision? Did you see it coming? And what does the approval of these ETFs signal to you?
Frankly, I was delighted by how much drama there was left in that last season finale episode, because this is something we've all been thinking about for years. And it's really, frankly, for those of us who are in the industry and think about all digital assets and the digital asset class every day, we're kind of glad to see a lot of 2023's sort of dirty dishes get done and put away. Between the court cases and the lawsuits and the regulator slow movement and waffling in lawsuits there too, and the disposition of bad behavior from 2022, it's all part of that season, which we're happy to close. We really love the breadth of the ETFs that are on offer right now. The Grayscale Bitcoin Trust conversion leaves it to be really by far the largest ETF available. We see that they've filed for some follow-on products to make the environment even richer and to pursue different outcomes. So now we see an environment where it's kind of okay to really think about using a Bitcoin ETF in a portfolio. Other outcomes will be addressed with different objectives and different products coming up in the very near future. We'll have some things to share there soon. And we think kind of the game's afoot. Most investors, though, once they really get involved and get educated, will think, what else can I do? Where can I find diversification? And that's exactly why the launch of the CoinDesk 20 right now is so important.
What have you been paying attention to since these ETFs started to trade in the US? What trends have been standing out to you since they launched?
I think the most important trend is that, Bitcoin, actually the ETFs launched 1 week after Bitcoin's 15th birthday. And those of us who have been watching digital assets for many years realize that this started as a retail trading pastime. It's almost like a hobby for many folks, although for some it was a very, very serious hobby. And institutional adoption has been a little slower because guess what? Institutions don't have hobbies, but people do. What we've been really noticing is how the institutional financial framework has come in to support liquidity in many different ways. So how authorized participants for ETF companies have come up the learning curve to support these new giant ETFs, how the futures markets and the spot markets have started to integrate even better. And of course, offshore, where we see a lot of trading in perpetual futures, which is a real specialist product for crypto, those have really come alive, especially on the bullish exchange. And so now having index perps and really having an index level really represents the next generation of institutional provision of liquidity down through the chain.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.